Ladies and gentlemen of the crypto space, we're live on a Tuesday, July 26th at 11:29 a.m. Now, this story today is going to be a completely subjective opinion based on my experience and where the history of my engagement with the crypto space started. So it's biased, but it's a point of reference. It's contextually relevant. It's something to attempt to achieve, meaning as you guys are engaging with your interactions with the space, this is something that has proven sustainable for myself. A mentality, a methodology, so on and so forth. And I'll share that. So obviously, we've seen significant depreciation from highs, but from lows, it's an interesting perspective. And for instance, Aura is a very interesting story because it just launched. But let's put it this way. Let's say I bought $6,000 worth of Aura and vote locked it. And I did at about 66 cents, give or take. So, sure, the price point of the position was up at like 36 grand, it's down at 27 grand now. It went 4 or 5x on the money. But if it's producing, let's pop it over to the main screen and I'll give you guys the perspective. So here, the Air Force will show us my weekly expectation. So I'm expecting about 700 bucks to clear. Now, 700 bucks relative to its high of $36,000, the position for myself, is a relatively small percentage return. I bought the position for 6 and change, as mentioned. So I'm literally getting over 10% every 2 weeks relative to the position I took at the bottom. The bottom gives you a very powerful perspective. It's 10% every 2 weeks. And this gets sold to cash. Now, obviously, the only thing I could possibly think about this position is, damn, I wish I bought more at that 66 cents, but it's okay. I'm over it. I'm appreciative. I'm thankful because this cash pays, well, this cash literally pays for both my cars. And we have to be humble in that regard. We want more, more, and more, but for 6 grand at that purchase, or just paying out for 2 cars, thank you very much, Aura. And I appreciate it because the way this system works is it's a federation, such as the Curve Federation. So these incentives aren't paid by Aura. These incentives are paid by third parties, as well as third party actors engaging with Balancer, producing the transaction fee revenue that is in turn sent over to Hidden Hand because that's the way the Balancer Federation has been structured. So there's a degree of sustainability associated with these third party incentives, and there's a likely expectation for these values to rise. Now, if you look at the position from this perspective, why do we even ever have to look at the value of the position? This is the value that matters. This is the cash. This is a paycheck. That's what it is. I take this and I put it on any of your favorite debit cards and I pay for things. Found the new interesting debit card, by the way, this Juno. Very cool. Gives you a checking account. So you could literally, like, I wonder if you could do a wire transfer from the checking account. That's what I'm interested in. I could directly deposit stables and do a wire transfer because then my trust could purchase like property and pay for things. Well, I could do ACH, so I could buy a car from the trust and the payment that would be an ACH withdrawal. So, but properties would be a wire transfer. Anyway, I'm digressing. Let's see the Aura price for the fun of it. So this was expected. Rising wedge broke down, lower lows. You know, this pops below the 218. That'd be very meaningful, particularly because there's a convergence here of support and previous resistance. It's just there's no way to know whether it holds as support, but what do I always say? Holding as support is a sign of weakness. Resistance flips support is a sign of strength, and resistance holding as resistance is just not pretty. That's not weakness, that's weakness plus plus. So if this breaks below that $2, about 10 cents below from here, I would expect further bearishness, further depreciation. And maybe we'll get some nice price points for an entry at $1. I'd like that. Anything close between 60 and $1 is very tempting, considering what we've seen from the first couple of weeks of production functionality. These numbers have been going up, and I like the degree of productivity. So, I mean, that's the perspective I wanted to share. It's not the most exciting intro monologue because it's in a bearish macro context. Basically, everything's depreciating. We had a very nice run of a week or two of significant appreciation, but we got a lot of bearish engulfing candles that are presenting themselves on the daily, if not the weekly charts at this point. But there's a lot of things that come to mind, and I shared my perspective of X amount of capital that I had, let's say, end of 2019, Q4 2019, and where it is today. I've always said the principal will fluctuate, but now we have this productive assets in the crypto space that pay you a salary. Does it matter the principal valuation? Does it matter? What's pertinent is does it survive and continue to pay weekly cash flow? Because if it survives, it will appreciate again, but who gives a shit if it appreciates again? It doesn't matter. You're not going to sell it. They're productive assets. What matters is these types of numbers. These weekly and bi-weekly payouts. They'll go up in value too, which means your paycheck just went up in value. So it doesn't make any sense. If your portfolio is worth 10 mil, you could sell it, but if you make it 50 grand a week, why would you sell it? It'll go down 40 grand, 35 grand, 20 grand in a bear market, and then it goes back up. It goes down, it goes up, it goes left, it goes right. I guess the story is not about depreciation or loss of capital or capital gains. It's about a sustainable mentality, something that's different than the way everyone scrambles to engage with the space. So I bought Ethereum yesterday after watching Raul, because every time you watch Raul, you're like, oh my God, this story is so good. His stories are so good. He's the best storyteller. And I agree with it 110%, but what happened was I sold the Ethereum. I bought a 32 clip. And it's completely inconsistent with the methodology that I choose to engage the space with. Sure, the internet bond and everything he talks about is wonderful. And I agree with it. But it doesn't follow my rules. It doesn't follow my narrative, the story I tell about how I've done what I've done in the space and how I wish to continue doing what I do in the space from a sustainability perspective. I want to not sell things, meaning I'm selling obviously the yield and the revenue from the incentivized voting, but I'm not selling positions. I don't want to buy the Ethereum just to sell the Ethereum. I want to buy the Ethereum to put it into a POS block position, a node. But what's the rate of return? 4, 5, 6, 7, 8%? Is it going to be as lucrative as transaction fee revenue? So I know, obviously, the deflationary component that I talk about. It's extremely meaningful for price appreciation, especially when demand exceeds supply. And if it's deflationary, yeah, it's going to be highly volatile to the upside in such conditions, such monetary policy. But is it going to be more productive than a Forex market? Is it going to be more productive than a money market? Than a financial protocol? Base layer component, no real financial historic precedents, maybe bonds. base interest rate point of reference, as Raul talks about. But I just don't think it's going to be more productive than the protocols that we talk about most often. So this is a cost-benefit analysis, and we're an opportunity cost analysis. That's the deal. So I just see opportunity costs associated with Ethereum. And this is the same for all the protocol assets. They're meaningful. I need to have Ethereum. Why? Because I need fuel, I need gas to engage with the protocol. I need it for money purposes. I need Bitcoin for money purposes. Plenty of Bitcoin. Well, not plenty. I have a fair amount. Why? Because when people want to be paid in Bitcoin, I have Bitcoin to pay them. But what's the most ubiquitous currency to make payments with? It's damn dollars. Dollars. The dollars that everyone hates in the crypto space. The optimal portfolio denominator. This reminds me of the argument in 16 and 17 of how do you denominate the portfolio? I denominate it in Bitcoin. I have more Bitcoin. Bitcoin. You're not going to the store and paying with Bitcoin. You're selling the Bitcoin to make a payment at a store, which means if you sell the Bitcoin at the shit part of the cycle, you're not getting the best bang for your buck. So Bitcoin, all this stuff is money. Bitcoin is money that you only want to sell when it's relatively valuable, not when it's depreciated. So it's money only periodically. It's money only when it's up. Or it's good money to spend only when it's up. It's shit money to spend when it's down. You don't want to spend Bitcoin when it's depreciated. So it's money for only a couple of months out of every 2 years, 3 years, according to the Fed interest rate cycle. Because obviously that's what this is all about, where we are in the cycle. So dollars. You get paid revenue from third parties that are paying you to vote because these protocols are dependent on the emissions from these Forex market monetary policies, from Balancer now as well as Curve, obviously. So they're paying us to have Curve pay to incentivize deep liquidity. Their survival, the survival of these protocols, are dependent on them making money, in turn to pay us to achieve in a capital efficient way effective liquidity for their assets, which in turn ensure the effective functionality of their protocol. So in turn they make revenue, they pay us, and there's the loop. Tetranode talked about it takes X amount of dollars, like a VC capital raise, in order to get a token, an asset off the ground to effectively finance deep liquidity. You need liquidity, otherwise you can't trade, and if you trade and there's no liquidity, you get slippage and it's just a horrible market. You want deep liquidity. So in order to get deep liquidity before Curve, the initial part of the DeFi experience was you paid people directly. But it turns out now, after 2.5 years worth of experience, that it's more capital efficient to have Curve pay for that deep liquidity, now to have Balancer pay for that deep liquidity. It's going to be very interesting over the next couple of years, and this is where I want to be. Hope that story makes sense. Hope it helps. I know a lot of people are probably underwater at this point. And there's the old thing that everyone says, time in the market, meaning if you have the assets now in 4 years, sure, if in 4 years, if your assets, your portfolio is worth 10x the amount of money, you're in the green. You don't care if it goes down 50%, 75%. You're still in the green on the portfolio valuation. And now you're in the situation that I describe, where it doesn't matter what the portfolio valuation is, as long as you're getting weekly income. And that's a speculative statement, meaning you have to wait a couple of years to figure that out. But that's where I am. I waited 2.5 years from most of my capital inflow into the crypto space in late 2019 to get to where I am. And now the portfolio is valued more than what it was in 2019. Still sitting on like a 10x portfolio, which is great. I don't care if it goes down another 50%, another 75%. what I care about is that the protocols that pay me on the weekly and the biweekly survive. Because as the markets have liquidity flow into them again, these protocols will appreciate. The weekly revenue will go back up, probably see higher highs on the weekly revenue as well as the portfolio value. So I'm comfortable. And the whole point of the story is to find a sustainable way to engage with the system. Not, oh my God, it's going down. I gotta sell it. Oh my God, it's going up. I gotta sell. Sell for what? For dollars. See? Do you sell your Bitcoin for dollars? Yes, you sell it for dollars, but you have to sell it when it's valuable to sell it for dollars. I don't like that mentality. It's not sustainable, and it's not my way. Makers in the house at the moment. Where do you vote? Where VLCVX or some swapping for stables or accumulating assets? I swap everything for stables. I get paid. I have cash. I pay bills. So this Juno debit card looks cool. I'm going to throw some cash on it, pay some bills. Obviously, Crypto.com has their debit card. And BitPay also has their debit card. So I basically have 3 debit cards that I play around with. And it works out very well. Now, obviously, with Juno, because as a checking account, I could use like credit cards. I could use American Express, and I could pay. I could get an American Express card in a business for a business, like and you incorporate, and now you have a tax ID for a business, or my trust, and you have a tax ID, and you could pay your credit card with crypto using the checking account that Juno offers. Now, that's interesting. For now, I don't think I'm going to be pursuing that. I'm just going to continue with the debit card uh, strategy. Crypto bets in the house. CVX. Dan's in the house. Tap C. DeFi Django. I'm looking for potential increase my CVX and GMX exposure if the markets keep dropping this week. I was hoping to get CVX above 55% yield, assuming 8-cent bribes. So CVX is a wonderful protocol. It's a derivative of Curve. It's the dominant owner of the Curve supply. And someone asked me this morning on Twitter. I was a little short. I shouldn't be short. About like concentrator. It's just a derivative protocol, and there's plenty of derivatives. If you go to Stake DAO, you can see the accumulators and abracadabras accumulating, and everyone wants to own the commoditized inflation of the Curve Federation. So I don't need to own the derivatives. I'm more than interested, mostly interested in owning the base layer. Now, folks in the past, even Tetchano talked about the curve being diluted. Sure, if you look at the emission schedule, what, you get diluted another 50%? Circulating supply compared to max supply? What's the potential max dilution versus where the potential for the market is to head? You get diluted 50%, and in 2, 3, 4, 5, 6 years, there's a steep drop off in emissions. The curve emissions are disinflationary, and transaction volume through the DeFi space goes up 10x to 100x. Yeah, okay, it's okay for it to be diluted. So I'm much more a fan of cutting through the derivatives and owning the base layer. So the balance of federation is not quite there yet. So Aura is still much more productive. It just started, still much more productive. It just is what it is. I actually, when I bought my Aura position, it was smaller than my VE BAL position, but I'm going to retain the VE BAL. It's not that productive. It produces like 10%, like 50 to 70 bucks every 2 weeks off of my entry into VE BAL was a $30,000 position. So I'm not getting a lot of bang for my buck on VE BAL, but I'm sure getting a ridiculous bang for my buck on VL Aura. I mean, that's just wild. $6,000 entry producing 700 bucks every 2 weeks. That is a ridiculous bang for the buck. Ah, look, voting ended, so this is locked in. That's very, very satisfying to see. That damn V bow position's like 10 grand right now. Is a 20 grand loss. That's disappointing. Let's keep it going. Zoidberg's in the house. Tyler, many discounts, maybe discounts come back. Discounts are certainly coming back. Look at the charts. I don't know if we get lower lows. We got the 50 SMA below on the daily for convex, below the TWAP. So we'll probably see speculative see a bounce here, hits the TWAP, gets rejected. So we have a bearish downtrend for a bit. Do you get down to the low of 312? Woo, that was a low. I don't know. I don't know. There's no way to know. Anyone who says they know is not providing good content. Even if it gets lower low, as long as it doesn't get a lower low than the historic lows at the end Q4 2021, this is very interesting. I would love to see this trend line just hold. Now you see 60, 70 cents, 80 cents, 60 to 80 cents on curve would be wild numbers. Good opportunities. I'd probably be buying. I'm stacking cash until then. Wish it was more lucrative, but it's not. It is what it is. You got to play your hand. You can't sit around and hope for what you don't have. You got to play with what you have. It's like playing poker. You got to play your hand and appreciate it because you worked hard to get your hand to what it is, and don't diminish what it means. Took effort to build what you have. Eduardo's in the house. Appreciate the videos and your knowledge. You're very welcome. I hope it makes a difference because obviously, how many YouTube streamers are left? How many people in the Twitter space are left that are, oh, it's going to the moon? No shit isn't going to the moon. The Fed is tightening and liquidity is draining and everything's getting crushed. The story that's important to understand is not about what's going to go up so much. It's the macro reality of financial markets, the cyclical nature of financial markets, the power of Fed psychology, their psyops, and the meaningfulness of the tightening cycle, aside from the psychological effect it applies, it does affect liquidity availability as it flows through all the financial markets. So that's where we are. That's why things are down. Is there almost a guaranteed certainty that there's going to be ample liquidity flooded throughout the system? Almost yes. It's not 100%, but it's certainly very high up there. 80, 90%. It's really a matter of when, not if. The economy is either on or off. It's either on its way to deflationary collapse, or they have to add liquidity, which keeps it going. That's what the reality of the financial system has become. So as the liquidity is added to keep this debt construct going, these very volatile financial assets, the crypto assets, are highly susceptible to liquidity availability. When there's ample liquidity, these assets are extremely volatile to the upside. We've seen it how many cycles, and it will continue to play out. That's the deal. Good morning, Noah. What's the website you use to see real consumer price index? Oh my God, shadow stats. Yeah, shadows. No, that's not it. Yeah, shadow government stats. Shadowstats.com. Yeah, like 17%. I mean, literally, it's not even like shadow stat. This is just the way they measured inflation back in the 80s. That's all it is. I mean, 17% inflation. That's wild. Jesse's in the house. A pleasure. A pleasure. That was a good purchase. Yeah. Yeah, that Aura purchase was pretty good. Hello, Raul. Link, hey, hope your day is going well. Thanks again for your time and your thoughts. It's a pleasure. My favorite time of the day is talking about these topics. Tapsy's in the house, comfortable with my current position at $1.20, feeling like an amateur that I could not wait for discounts. Will value these lessons though. Yes, it's not about being an amateur. It's about every time you do something, you're gaining experience. You did that, therefore you have that as a point of reference when you do something else. So keep moving. The biggest thing that you get out of being in crypto is literally just being in it. And it's not just crypto, it's any market. And you can't just leave. You got to learn to navigate these markets. There's no other way to even attempt to achieve financial freedom other than learning to navigate markets. Because to start a business, you still need to understand financials, and you need to understand how to navigate markets in order to acquire enough capital to start a business. So even from a business standpoint, you need to be a market navigator. And then a business has financials, a balance sheet. You got to manage that. And then a business, hopefully you want to accumulate capital. And are you going to keep the capital in cash? Or are you going to have a diverse set of assets on the balance sheet of the business? So the business is still going to have to deal with the shit that we deal with. How do you construct the balance sheet of the business? So it always comes back to the stuff that we talk about. Capital management, whether it's a business, because you want to be an entrepreneur, or you want to manage your capital directly for yourself, which is an entrepreneur for yourself. You're doing exactly what we're doing, no matter where you're doing it, business or personal. See, still, you can't leave this. If you leave this, you're going back to the same thing that led you to this space in the first place. That you're not going to do anything at all financially with your life, just getting a paycheck and putting it into an account. There's nothing that's going to be achieved. You need to manage the capital. You need to allocate capital. You need to have cash, but you need to understand what the cash is as a component of a constructed portfolio. Yes. We have evidence this will be adopted. UK bill going through. Law acknowledging stablecoins as payment instruments. I mean, it already is a payment instrument. I use it as a payment instrument. Now, obviously, I use it vis-a-vis debit cards. So the U.S. and many countries around the world have been innovative in that regard to get these instruments consumable as payment vehicles without the direct capacity to spend them. So obviously I go to a store, there's a credit card terminal, I'm using a credit card on that credit card terminal with NFC, boop, and there's intermediary systems that facilitate the conversion of the stablecoin to a dollar to a payment. But in the future, why, a credit card terminal, accepts an NFC transaction and it pays with USDC directly. So this is what's going to play out. It's just what it is. So your observation is spot on. Rupert's in the house. A pleasure. Fly me high. Hey, Noah, can you clear up the next stream why Jeff talk says rate cuts leads to risk assets sell-off when the general narrative seems to imply price goes up when the Fed pivots? Yeah, I don't fully understand. Maybe he feels that we're past the event horizon and that rate cuts and increased liquidity doesn't convey the required psyops to get liquidity on the sidelines to purchase risk assets. Maybe he's talking about sentiment, because sentiment is collapsing. So if sentiment continues to collapse and there's a shitload of liquidity available, the sentiment's not going to encourage people to actually deploy it. So this is a whole complex game of human psychology, human emotions, human sentiment, human risk tolerance, so on and so forth. So if someone could give you $1 million, but if you see the market collapsing, you're not necessarily going to buy things if you expect lower lows to print. So it's a complex calculation. And I would say my ideology stands. As long as these assets are producing capital and paying a salary weekly and biweekly, I am very comfortable and looking forward to the next couple of years. Fly me high. I hope that helps. One curious view. One POS validator will get a random one block every 2 months is my guess. Have 4 blocks, 4 months. Obviously, question is how much transaction fees you earn from the block. Transaction fees and obviously the mining reward. So it's going to be a percentage. 8%, 6%, 4%, 3%. You're in bond territory, and you're not proportional to transaction fees of a forex conversion. So that's speculative as well as business operations. If I'm in Europe and I have a euro stable and I need a dollar stable, it's going to go through one of the forex markets. So it's going to go through the aggregators, and if it goes through the aggregators, it's probably going to go through Curve or Uniswap, and they're going to fight back and forth. And that's the way market leaders interact with one another. Uber, Lyft, Microsoft, Apple, so on and so forth. It always goes back and forth, and they're going to fight for control by reducing fees and decreasing slippage, increasing the efficiency of the algorithms, so on and so forth. Maybe implementing Rook eventually to capture some of the MEV and claw back additional revenue, and automatically include front running and other arbitrage strategies directly into forex market transactions. That'd be very interesting. We've been thinking about that for quite some time now. It frustrates me that the market goes crazy after an inflation report and fails to react to the report up until the Fed raises rates. Yeah, it just shows you that there's leading indicators and lagging indicators. It just shows you how really shallow the average market actor's narrative is. It's just so shallow. It's like, okay, it's going down, I'm going to sell it. Or it's going up, I'm going to buy it. Now, there's some deep, rich stories to be told about the stuff that's going on in these markets. And yes, Joe, you're absolutely right. The vast majority of the market, which is seen in the price action, responds in a very caveman type of way. Like, oh, it's just not rich. And I tell a rich story. And that's why I've defined this narrative, because I'm not engaging with the markets in caveman fashion. And that's what happened yesterday. I cavemanned it and I bought Ethereum and I ended up selling it. Why? Because if you have something and you can sell it, sell it. And that's why I really like the portfolio as I've constructed it thus far. I can't sell these positions. Therefore, they're purchases. Therefore, the only significance of the assets that I have in the portfolio are the weekly and biweekly income, dollar denominated. Dollar denominated. Trevor's in the house. Heath, hey Cap, did you see Al God's comments on Curve on Twitter? Yeah, he doesn't get it. I believe. I believe I saw his comments. A lot of people don't get it. They don't get how productive it is, not because of the curve emissions, but because of the protocols that are dependent on the curve emissions, them paying. The revenue that people get for engaging with the curve protocol is not predominantly paid by Curve, it's paid by third parties that are dependent on the commoditized inflation that Curve emits. So there's a lot more to the equation. Are you delegating to hidden hand for Aura or voting yourself? I vote myself, which I don't want to delegate because I don't. It's like why I don't delegate the Vodium, because I don't want a diverse set of assets. I just want a concentrated, specific asset that I can sell quickly and efficiently. Joseph tried delegating and I haven't gotten anything to claim yet. Okay, that's an experience. I wouldn't delegate. That's just me though, and I'm sure it's going to work out just fine. Good day, crypto nerds in the house, Brady. Yeah, I guess we're nerds because we're not going anywhere. So I'm not. What I carved out for synthetics doesn't generate enough real yield to be meaningful to me. Not interested in the escrow as it X currently. So the option is just holding it on stake doesn't seem worth it. That is rational. Synthetics has a history. Deciding to add it to the portfolio has a lot of considerations. Very comparable to GMX with regard to options, very comparable to GMX in that they're both building federations. It took a long time for Optimism to get online. Synthetics was pretty much the first to deploy an Optimism, and they have the hallmarks or the aura, or we are encouraged to see a federation emerge with Synthetics at the base layer because of what it offers from an SUSD perspective. GMX doesn't have a stablecoin component. SUSD and Synthetics was probably one of the first and they created a lot of the contracts that the entire crypto space uses. So synthetics has one heck of a history. So there's arguments for both assets. So I guess uh, one thing's pertinent is the escrow period, which means with a synthetics position, you're not getting paid weekly until next year, until they start to unlock on the weekly. So I have a 1 year time delay before I get to claim paychecks. But I'm okay with that. So if you're not, it's not a position for you. It's okay. It's okay for shit to not fit your narrative. You all have to define your own narrative because the narrative has to be sustainable. So it has to be yours. And you got to follow your rules. And if you deviate from your rules, you'll be like, oh shit, I deviated from my rules. And look, yesterday I lost like 3.5 grand on that Ethereum purchase because I deviated from my damn rules. Don't deviate from your rules. The better you follow your rules, the better performance you'll have. Crypto Jake, crypto bets. Have you spoken about your crypto trust in the past and the advantages? Yes. I'm probably going to talk about that on Discord, a little bit more private of a setting rather than YouTube. Um, the advantages are incredible from a children's perspective. Children beneficiaries on a trust, there's no taxes from it, or no tax outlay, meaning with the trust structure that I have, taxes are deferred basically in perpetuity. And for children as a beneficiary, at the end of the year, there's no tax obligation. So you can literally get income from your claims and pay for everything regarding children, including food, school, health, medical. Not food, fun, and fashion. Those are the three things. Well, food, but not fun and fashion. Well, clothing, yes. Children beneficiaries on a trust have remarkable tax advantage. Um, Not fun. Like you can't pay for a trip. You can't pay. I mean, you can pay for education like museums and zoos and maybe even parks, like like a regional park. But not paying for airline tickets to a hotel. That's about it. Pretty much about it that I've seen that doesn't make sense for me to define as a qualified trust expense. So very tax advantageous for children until they're 18, and mine are 3 and 7. So I got a long time and a lot of tax advantage to take advantage of. I'll talk more about this in private on Discord. Um, Out of work early, as always, a pleasure to catch you live. Always make my home commute 100 times better. It makes me happy when I hear things like that. Safe driving. Sam, are you still holding on to your dark nodes? I see they're about 96 are deregistering. Yeah, I'm going to hold on to them. I haven't really looked into the state of the market, but they still perform. What is it, 20, 30% ROI, considering the depreciation. I don't see FTX necessarily uh, just abandoning all that technology. And if you think about it, Ren BTC is still a critical component of the DeFi space, and that's where a lot of all the Bitcoin in DeFi came from. And it launched on Curve, with Ren BTC paired with WBTC, and this is when Curve did $1 million transaction volume in a day for the first time. This was very, very early in the DeFi experience. So I don't see it evaporating, and it's just there. And I look forward to catalog, and I see FTX wanting to do things with the technology. So I'm still holding on to those. Uh, Dominic, I constantly show my friends your content, and they always ask me, how do I follow everything you're talking about? And I just tell them hard work and dedication. Well, the interesting thing is, it's not, yeah, follow, as in the shit I talk about is it's far out, man. A lot of people don't understand me, and my wife always says, try and talk so people understand, but in some regards, I feel that that'd be a discredit to doing better. And I have a hard time simplifying my thoughts because they come out complicated because they're freaking complicated thoughts. This market is complicated. It's not simple. So I I could do better, and I will try and do better always in that regard. But the biggest thing I try and tell everyone is you got to define your own rules. And I remember hearing this shit when I first started getting into markets. You got to define your own rules. What does that mean? Well, when you define rules and you deviate from your rules and you lose money, that's a perfect example of why you got to define your own rules and follow your rules. Lost money yesterday because I didn't follow my own rules. Shit. Megazord, how about Ample? Buy more. I haven't had Ample in quite a while. I like it as a technology. It's probably lucrative for many people that participate in its market. It's just not something for me. It doesn't fit into my narrative. It's meaningful and interesting and speculative from a stablecoin perspective. It's been quite effective. It's doing what it's supposed to do. It behaves in a very interesting way. So that's cool. I look forward to seeing what happens with it. That does not mean at all that I'm interested in having it as a portfolio component. Thanks. I'm trying to be more concentrated and feel like I rushed into it. We'll stay focused on what I have currently. GMX is building their synths platform as well, so I don't need overexposure. Boom! Why do you need overexposure to two assets to hit the same narrative? You hit the nail on the head, my friend. And I like to see exactly what you just said. You're defining your rules and you're trying to stay within your boundaries. So well said. Sam, question. Would you allocate a portion of your 401k to VE curve position? I would not have a 401k. Every 401k I've ever had over the years from every corporation, I rolled over to an IRA and I sold it all. And I took the tax penalty because I have Roth IRAs also and retirement. I have an IRA and a Roth IRA. But I sold my 401ks are useless. You're never going to achieve anything meaningful with a 401k. And I don't mean to say that to make anyone feel bad. I'm just saying that was my conclusion. So every company I'm at for the last 2-3 years, I've never taken a 401k, ever, because I'd rather get the paycheck to be able to buy assets that actually have the potential to achieve my financial goals. And you're not going to do that shit with a 401k. There's no financial goals being achieved with a 401k. And in many regards, I don't even like the stock market for capital. The only reason I have capital in the stock market is because they're legacy positions from 16, 17, and earlier that the narrative's still in play. It's not invalidated. And what am I going to do when they appreciate in 10 years? I'm going to freaking sell them to schmucks that bought them between now and 10 years from now, because that's what capital gains are. And that's not consistent at all with the sustainable mentality that I try to describe. So the core of my entire financial world revolves around the stories that I've been telling on this stream. I pay for the vast majority of my bills, including all my children's expenses, using weekly and biweekly income. And it's now tax advantageous because of the trust structure created since the last tax cycle. So, one of the biggest things to learn and to have experience with is crypto debit cards and get used to getting yield, selling it for stable coins, putting it on a damn debit card, and going out to dinner and spending money. If crypto is spent as money, it is money. Where'd you catch Raul speaking about Ethereum? Real Vision. He's got a couple of things up on Real Vision. So how did I pay for my Real Vision subscription? Tax advantageous through the trust. It's a business expense. Can't operate the trust if I don't have business expenses to have the education to learn how to operate the trust. So qualified trust expense. Just wondering what your top revenue producing assets are currently. Obviously, the core of the portfolio is Curve, but you're talking about these assets have been so productive over the last couple of years. CVX CRV was at 100% APR for quite a while, and it's hard, it's obvious what the most productive assets are. It's Curve, Convex, Aura, but this is a very precarious time to start constructing a portfolio, and just some context. Almost everything I say is biased. It's biased towards my perspective, my frame of reference. And my frame of reference is much, 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 much cheaper prices. Anything you buy in this market is expected to depreciate. Expect this stuff to depreciate until the Fed capitulates and pivots. So this market is all about trying to find optimal price points for entry. You could have the most productive asset in the world that's still going to sell. Just remember I said that before, like in March, April. If it can be sold, it will be sold. Always remember that. If it can be sold, it's going to be sold, and it's going to be sold hard. And we're looking at the damn charts. And you see these massive, massive bearish candles. I really hope Curve doesn't end this week with a bearish engulfing on the weekly. I'd like to see it hold one of these support lines. Each one of these green lines is somewhat of a meaningful price action support at some point throughout its history, either in 2021 or more recently. In fact, if we depreciate down to like a buck, this would be a wild inverse head and shoulders. So that'd be very interesting. What am I missing? Joe, 401 protected in bankruptcy. Uh, well, the IRA isn't protected in bankruptcy, and I couldn't even deduct the loss, the capital loss. I lost $250,000 on goddamn Nemaska Lithium. Horrible. Very angry. Still salty to this day. Especially the way it played out from a corporate perspective. It was a hostile takeover, totally manipulated, and they put him into bankruptcy, and they bought him out for pennies on the dollar, and they ended up selling them recently. Pallinghurst sold them to Livent, and Livent now owns 50% of Nemaska. So it's the most important lithium refining resource in North America, in the Western Hemisphere. Son of a bitch. Dan, what do you do with your IRA money? It's probably at this point it's sitting in cash somewhere, either on Gemini or in a checking account, or I probably bought crypto with it. I was pillaging my IRAs, and the rollover IRA is gone, and I was pillaging my Roth IRAs and retirement IRAs to build some of these crypto positions. And you only know in hindsight if they were good choices. And for myself, it worked out well for the biased perspective that I always must provide. Dominic, yes, defining my own rules in conjunction with the ones you preach all the time has made a daily thought process so much better. And that's the way it's supposed to be. My rules are my rules for me. They give you context and a point of reference that help you in your own individual rule-making process. Learning to understand your thoughts and what you're talking about has been a good journey for me. I think you're doing a good job explaining complex things. Thank you, Jonas. I try, and I wish I could do better, and I will always try and do better. Don't take the company's 401k match. Yeah, that's a hard one. I don't know what advice to give to my younger self. Like a match is a big deal because that's like 100%. It's just free money, just taking their money. Now I wish I could take their money and invest it in actually something that's freaking meaningful, something that's interesting. Maybe if a 401k allows you to buy individual stocks, like there's definitely stocks that I would like. There's interesting dividend stocks. There's stuff that is traditional dividend instruments that are not pieces of shit, that don't have balance sheets, that are riddled with toxic debt. So I could, in many regards, I could do what I do in the dividend space and the equities markets and REITs, so on and so forth. But it's just so much more meaningful in the crypto space that it's just a waste of time if you can do it here rather than there. But you can still do what I do there, which is by definition a traditional dividend investor. Now the burden is from a 401k you can't do shit, and it's managed by stupid schmucks that are taking fees from your revenue, and you're paying for their job. And I'm sick and tired of middlemen taking fees. That's a topic I've talked about on Twitter. Cutting out everyone, automate everything, get rid of those stupid fund managers. You don't need them. I don't want to pay them. I want to manage my own stuff, and I'm not paying anyone anything anymore. I bought 2 giant whiteboards in my computer room, and one of them has rules and yours, and of course, we can do better written right at the top. I wish I had room for a whiteboard, and I got a green screen behind me, and my desks are packed with stuff. Oh, a nice home office means a lot. One curious view is still salty. Throw that salt over your shoulder or bring you good luck, right? Man, those bastards. It was just such a hostile takeover. Literally, they went bankrupt because employment expenses in the region went over budget. Oh, you know what happened. You know what happened. Private equity came in, drove out the employment, made it scarce. The expense for work, labor went up. You know, that's what they did from a corporate perspective. Ooh, I'm still salty about that shit. Thinking the same about my situation. They just eat your money and fees. I mean, you could be profitable, meaning, okay, it's going up, but you're literally feeding a schmuck that's making stupid decisions over stupid stocks and stupid equity index funds and ETFs, and it's just you're paying them to do stupid shit, which you could do yourself, and that's what frustrates the crap out of me. Horrible, horrible, horrible. Tuesday, July 26th at 12:19 p.m. As always, thank you all for joining me today. I wish you all a wonderful day. Tell everybody to subscribe because we all can do better together. As always, after party on Discord for the most rational community in the entire crypto space. Love all you guys in there. I will catch you next time. It's only Tuesday. I should be on Thursday, maybe Friday this week. See you later in the week. Peace.